Flexstone provides opportunities. Core expertise is really around providing focus on the lower and middle market segment globally and providing private market solutions to our client. And by that, what I mean is really access to primary capital, primary funds, co-investments, and secondaries. Now, Flexstone is a global organization. We manage over $7.3 billion. We have an investment team of about 39 professionals. And we're very highly experienced with a senior team having on an average about 25 years of experience. We create value by really selecting fund selection and co-investment solutions, and on the secondary side. Selection is a key aspect for us, and we really focus on the lower middle market. The reason we like the lower middle market is we believe that in terms of valuations, they're more attractive on the lower end than they are on the larger end. Also, we believe there are various avenues for us to really add value on the companies on the lower end. First of all, in terms of selection, there's a much greater number of opportunities on the lower end in terms of number of companies that are, let's say, less than even 200 million in revenues. There's a lot greater size of companies in that end than there are companies that are over $1 billion in revenues. Two is in terms of really growing these companies, we can do more consolidations on the lower end. There's more opportunities to do add-on acquisitions. There's more opportunities to turn around these companies in terms of enhancing their operations. There's opportunities to enhance the management team. And then lastly, in terms of exits, there's a much greater number of exit opportunities for companies on the lower end, so they're not necessarily tied to the public markets. In terms of portfolio construction, we believe, one, it's all around diversification. Diversification in terms of vintage, which goes back to being consistent allocators in private equity. Diversification in terms of geography. Secondly, it's also very important to really look at managers and kind of looking at how companies or these funds perform during down markets. And again, building a portfolio that can have kind of long-term sustainability across all market segments. In terms of sourcing, it's really done while we're a global firm. We really source on a local basis. So we have teams regionally in Asia, in Europe, and in the US. And we have a strong just network of relationships within the private equity community in each of those regions, as well as really having a strong network with placement agents and having a huge pipeline of opportunities. So for us, it's really mapping out the entire private equity landscape across sector funds, across geographies or country funds, and really timing the market and kind of saying, not in terms of timing going in and out of the market, but it's really kind of seeing when these funds are coming back to market, evaluating our own portfolio, and looking at re-ups and looking at new opportunities that are coming to market. In terms of the long-term opportunities that we're looking at, one is we're really looking at businesses that tend to be, and kind of looking at how they've performed during the prior downturn. So we're looking at businesses that have generally sustained pretty well during the 2008-2009 timeframe, businesses that have high margins, high cash flows, and are really better capitalized. So we're very focused on, one, valuation. Two, we're very focused on the overall leverage of these companies, and we're looking at really kind of in terms of what end markets they're serviced. In terms of market conditions in US and Europe, we'll start with the US. On the US side, there's definitely some uncertainties, particularly on political headwinds and divisiveness in the US market, as well as trade wars and some of the issues around that. Having said that, we do believe that the markets are generally stable in the US for domestic spending. The valuations are high, although I would say that the capital structure of these companies is a lot stronger today than it was during the pre-financial crisis timeframe. So there's a lot more equity in these companies, and as a result, they can better sustain downturns. On the European side, there's also some political uncertainties with Brexit and some of the geopolitical tensions there, but similar to the US market, while we believe the valuations are high, we do believe the capital structure on these companies is a lot more attractive today than it was historically pre-financial crisis. So we do think that over the long term, if you're a long-term investor, you can find pockets of opportunities in both US and Europe, but you just have to be selective.